our online viewers and those who are tuning into the broadcast, coming to you live from the Bank of Namibia auditorium. Today, you will have the opportunity to hear directly from the chairperson of the Monetary Policy Committee, the Governor of the Bank of Namibia. The Governor will provide insights into the decision that was taken by the Monetary Policy Committee and elaborate on the factors that influenced this particular decision. Thereafter, we will welcome questions from the media practitioners in the room. Those will be the proceedings for the morning. Once again, welcome. My name is Nafiku Hamunime, and I'm from the bank's Strategic Communications Department. With those introductions out of the way, let me now welcome the Governor of the Bank of Namibia, Mr. Johannes Gavachab, to deliver the second monetary policy announcement for 2024. Governor, the floor is yours.
The Monetary Policy Committee of the Bank of Namibia has decided to keep the repo rate unchanged at 7.75%. This was done following a review of global, domestic, and international operations and developments. We've decided to keep the rate unchanged to continue safeguarding the peg between the Namibia dollar and the South African rand while supporting the domestic economy. Let's consider the domestic developments that influenced that decision. Domestic economic activity remained firm in 2023 and during the early months of 2024. Inflation continued to ease while the growth in private sector credit extension remained weak. The merchandise trade deficit narrowed and the stock of international reserves remained sufficient to support the currency peg and meet the country's international financial obligations. Real gross domestic product registered a slower yet firm growth rate of 4.2% in 2023 compared to 5.3% recorded in 2022. The slowdown reflected weaker growth in the primary and secondary industries, especially in the agriculture and construction sectors, as well as the diamond mining subsector. Meanwhile, economic activity was sustained by the tertiary industry, whose growth rate edged higher during 2023. For the early months of 2024, economic indicators suggest that domestic economic activity increased further during this period, mainly observed in mining, electricity generation, tourism, and wholesale and retail trade sectors. For 2024 as a whole, gross domestic product growth is projected to moderate to 3.7% on account of the anticipated slower growth in the primary industry. Risks to the domestic economic outlook have remained broadly unchanged since the previous MPC meeting, although the conflict in the Middle East has escalated notably. External risks continue to reflect the prolonged, tight global monetary policy stance, disruptive geopolitical tensions, and geoeconomic fragmentation. Internally, adverse risks mainly include uncertain rainfall patterns and water supply constraints and interruptions, particularly at the coastal towns. Domestic inflationary pressures eased further since the previous MPC meeting. Overall inflation slowed to an average of 5% during the first quarter of 2024, from an average of 7% during the same period in 2023. The deceleration was predominantly driven by food and transport price inflation. Likewise, inflation decelerated to 4.5% in March 2024, relative to the 5.4% for January 2024 reported at the previous MPC meeting. Looking ahead, inflation is anticipated to slow down to 4.9% in 2024. That is 0.1 percentage point above the projection given at the last MPC meeting. The slight upward adjustment is on account of persistent geopolitical tensions, which could potentially include or induce speculative spikes in oil prices and uncertain rainfall conditions. Annual growth in private sector credit extension moderated to only 1.7% in February 2024 from the 1.9% for December 2023, which was reported at the previous MPC meeting. Similarly, private sector credit extension growth slowed to an average of 2% during the first 2 months of 2024, compared to 2.8% in the corresponding period in 2023. This was on account of lower credit demand by households, particularly in the categories of mortgages and other loans, advances, and overdrafts. Namibia's merchandise trade deficit narrowed to 5 billion Namibian dollars during the first 2 months of 2024, which is 19.2% below its level in the same period of 2023 as export earnings surged while import payments fell. The higher export earnings were mainly observed in mineral exports, particularly uranium and gold, which were supported by increased volumes exported and the exchange rate depreciation. Meanwhile, the decline in import payments was mainly due to lower imports of mineral fuels. The stock of international reserves was lower at 54.3 billion Namibia dollars as at the 31st of March 2024, relative to the revised 55.8 billion Namibian dollars on 31st of January 2024. The decrease was attributed to net commercial bank outflows and government foreign payments. At this level, the international reserves stock is estimated to cover 3.8 months of imports. This remains sufficient to sustain the currency peg between the Namibia dollar and the South African rand while meeting the country's international financial obligations. The import cover, excluding hydrocarbon exploration-related imports, however, stood higher at 4.3 months. Let's consider what's happening globally. Global output maintained positive growth in the fourth quarter of 2023, and it is projected to remain resilient in 2024. Some inflationary pressures persisted in both the advanced economies and the emerging market and developing economies. Most monitored central banks kept the policy rates unchanged since the previous MPC meeting. The global economy maintained positive momentum during the fourth quarter of 2023, while the Group of 20, also known as G20 economies, registering a growth rate of 3.2%, slightly above the 3% recorded in the preceding quarter. The improvement was largely attributed to stronger performances in the United States and India. For 2023 as a whole, global growth came to 3.2%, slightly below the 3.5% recorded in 2022, partly due to restrictive monetary policies and the disruptive impact of geopolitical tensions. Going forward, the IMF projects the global economy to grow at the same pace of 3.2% in 2024. That is 0.1 percentage point upward revision from the previous MPC meeting. Prices of most key commodities increased since the last MPC meeting. Accordingly, the price of gold increased to record high levels, most recently supported by safe haven purchases. Likewise, the uranium spot price remained high compared to a year ago, reflecting sustained long-term fundamentals related to strong demand for cleaner, safer, and more secure energy, despite receding somewhat from its January 2024 high. Zinc and copper prices have risen due to a tighter supply outlook and optimism around the Chinese economy. Food prices, as measured by the United Nations Food and Agricultural Organization Food Price Index, ticked up recently, attributed to seasonal factors and uncertain weather conditions. On the contrary, diamond prices continue to trend downwards on the back of weaker global consumer demand. Since the previous MPC meeting, most global equity markets trended higher up to the end of March 2024 compared to January 2024, buoyed by favorable risk assessment. However, several stock markets recorded losses so far in April 2024 due to a hawkish US Federal Reserve, sticky inflation, and the intensification of geopolitical tensions. Bond yields in most monitored economies increased since the previous MPC meeting as markets were adjusting to possibly more stubborn inflation and a potentially longer period before policymakers start reducing interest rates. Most recently, inflation was sticky in most of the monitored economies. Among the advanced economies, inflation edged higher in the US and Japan, while it slowed in the United Kingdom and the Euro area. In the emerging markets and developing economies, inflation rose in China, South Africa, and Russia, and receded in Brazil and India. Likewise, inflation in most key economies edged higher compared to the previous MPC meeting. Looking ahead, global inflation is anticipated to slow from an estimated average of 6.8% in 2023 to an average of 5.9% in 2024, slightly above the level reported at the previous MPC meeting. Monitored central banks kept the policy rates unchanged at the most recent monetary policy meetings, except for the Bank of Japan and the Central Bank of Brazil, which raised and cut rates respectively. While inflation remains generally lower than a year ago, underlying inflation is still elevated. Hence, most central banks have exercised caution with the stance at recent MPC meetings. The Monetary Policy Committee of the Bank of Namibia noted the persistence of global inflation and a range of inflation risk, but took comfort in the downward trend in domestic inflation and the positive level of domestic real interest rates, which helped to contain inflationary pressures. The level of international reserves was deemed adequate, while the overly subdued domestic credit growth remained a concern. Against this backdrop, the MPC decided to keep the repo rate unchanged at 7.75%. Likewise, the prime lending rate remained steady at 11.5%. This policy stance will continue to safeguard the one-to-one link between the Namibia dollar and the South African rand and support domestic economic activity. The MPC views it as important for monetary policy to create and maintain an environment of stability and certainty. Thank you.
Thank you, Governor. We will now open the floor for questions. If there are any questions from the journalists, please make your way to the microphone on either side of the room. Remember to state your name and also state the organization that you represent. Are there any questions in the room?
My name is Shania Lazarus. I'm a reporter from the Namibian newspaper. Well, you have been reporting on economic growth I believe in the last economic outlook, the central bank did mention that there has been economic growth. However, we have seen that private credit extension is basically not really improved. And even with the house pricing index that we recently received, people are not able to pay for their houses. The house uptake, also the mortgage, has just completely declined, meaning that the economic growth that is being mentioned by the central bank is not being really reflected by the people on the ground. So I wanted to find out from the central bank, what are you really doing to make sure that the ordinary Namibian is able to afford basic goods? It has really become of a great concern, and that was my question.
Thank you very much. We'll take a few more if there are any. Any questions from the other journalists in the room? Okay, Governor, you can go ahead. Thank you.
Ms. Lazarus, it's quite a good question that you're asking. Growth that we are seeing is not cascading down and transmitting through the ordinary Namibian. Is that the question that you are asking? So it's a very valid question. We will start communicating, hopefully over the next 3 days, some facts and figures that you see that it's actually benefiting Namibians. We look at the basket of goods a few months ago and how much it costs now, so that you could see what's happening. You're probably also asking, inflation is decelerating. That's not the question you haven't asked. Or were you expecting us to reduce interest rates, Ms. Lazarus? So, because you want people to benefit. Inflation is decelerating, but it's not defeated yet. So the last thing we can do is to make some policy errors, to just reduce rates now. And if you look at what inflation has done, the first 3 months of this year, you had an average inflation of 5%. The first 3 months of last year, you had an average inflation of 7%. So although it's coming down, what we are seeing inflation is going to doing in April, we're going to see in April inflation ticking up again from 4.5 to 4.7. In May, it's probably going to come down to 4.6. And then in June, it's going to go again at 4.8. So we forecast for the second quarter of this year, inflation to average around 4.7%. So we are not out of the woods. We haven't defeated this inflation as yet. And I said to my colleagues that inflation, there's no virtue in inflation. It's not good for ordinary people. And our mandate is price stability. We need to ensure that we are confident enough that actually inflation is coming down to the levels we want them to be before we can take a decision. And I know many people I've read some of our colleagues writing on papers, we are waiting for the South African Reserve Bank before we can decide. We are not SARB-dependent on our decisions. We are looking at our own data, our circumstances specific to Namibia. And many people actually don't realize that if you look at our repo rate is 7.75, the repo rate in South Africa is 8.25. If we are so dependent on SARB, ideally you'd like, because you are pegged, you'd like the rates to be the same. But to help the local economy, individuals and businesses, our repo rate is at the level where it is currently, lower than South Africa. So we are not entirely out of inflation. We expect it's going to pick up again for the next quarter, and that's why we keep the rate unchanged at this point in time. We've got so many risks geopolitically as well. You are reading about Middle East is on the brink, and that could have implications for supply of fuel, and could have implications for food prices. Food prices have come down nicely. And Ms. Lazarus, I'll make sure they communicate to you so that you can share the information, the extent to which food prices have come down.
Thank you, Governor. Are there any other questions? I'm not seeing any other hands. Thank you very much, Governor.
Thank you.
With that, we have come to the end of our proceedings. From all of us at the Bank of Namibia, we sincerely appreciate your attendance and your participation. For those of you who are in the room, let's continue the conversation outside. Until next time, goodbye. Thank you.
What does the Bank of Namibia do for you and Namibia? Also known as the Central Bank of Namibia, the bank makes sure that banking and financial institutions under its supervision are safe, sound, and able to withstand any shocks. One of the ways the bank does this is by supervising commercial banks. The Bank of Namibia monitors the national payment and settlement system to make sure that our transactions are safe, legal, cost-effective, and timely. The bank also facilitates payments between people as they transact through various commercial banks. The bank ensures a stable supply of good quality banknotes and coins within the country. The Bank of Namibia makes sure that prices of goods and services in the economy do not increase too quickly, keeping the value of the Namibian dollar stable, whether it is in your pocket or bank. The Bank of Namibia provides banking services to commercial banks and government. As banker to the government, the bank is responsible for processing government payments domestically and internationally. The bank also manages Namibia's foreign reserves, allowing us to pay for imports. The Bank of Namibia is responsible for the regulation of inflow and outflow of foreign currency. This assists in the overall management of foreign reserves. The Bank of Namibia fulfills these functions to support economic growth and development.
Have you ever wondered how much money